So how important are all of these international cross currents for U.S. stocks? And is it time for American investors to pay more attention to trouble spots around the globe? Joining us now to talk about this, Art Hogan. He's Chief Market Strategist at Wunderlich Securities, and Ian Bremmer, President of the Eurasia Group, a political research firm. Ian, Art, thanks for joining us. Yeah. Just to kick off our conversation, I'd like you to take a listen to the views of two top investors over the past couple of days, and then like to get your reaction. Take a listen.
What I've been doing over the last week or so is reducing my exposure and moving a portion of my portfolio to T-bills, not because I think anything's going to happen tomorrow, but because I don't understand how you can have so much chaos in the world and still have prices going up every day.
Do you remember another time where there were more issues going around the world all at the same time, any one of which could overnight turn into a major disaster? You want to talk about ISIS, you want to talk about Gaza, you want to talk about the Ukraine.
So, Art, let me begin with you. Do you feel the same way as these two guys?
Well, it's interesting. I do. I think, there's as much concern on a geopolitical front globally as there has been in the 25 years I've been in the business. That said, we have to rationalize that down to economic terms. And when you try to do that, you look at each individual crisis and say, what does it mean to both the domestic economy and the global economy, and what type of effect can this have? It's hard to draw, yourself out to worst case scenarios, but sometimes you often do that. And luckily, none of the situations we've, been faced with have gotten to that point. So, my feeling is, there's a credible possibility that the global community puts a lot of pressure on Russia. That continues, and Russia backs down on this at some juncture. We heard some rumblings about that at the beginning of the week. That would be the first and foremost, the most major of the geopolitical concerns, and certainly help the European economy. Europe is most adversely affected by the sanctions we're putting on Russia right now. So the way I look at it is, hopefully the global geopolitical conflicts remain local and get resolved without turning into major disasters.
Ian, the world is always a dangerous place, I guess sometimes more so than others. How would you weigh the risks in the world today as risks to my money and my portfolio?
Well, certainly in terms of timing, the largest this year is Russia-Ukraine. But it's much, as Art said, the risk. Look, I don't believe it's going to get resolved at all, but I also don't believe it's going to metastasize globally. Those are two different things. And I think one of the reasons why Americans are prepared to shrug this off in terms of the marketplace, they're also prepared to shrug it off politically. Despite everything we've seen, there's very little interest of the Americans to truly engage, to try to stop the Russians. No one believes the present policy is going to do that. That's because it affects Russia, Ukraine, and the Europeans a lot more than it affects the United States. After the 2008 financial crisis, a lot of people believed that the United States was the cleanest dirty shirt. That was true economically, but it's even more true geopolitically. All of the things that you heard Sam Zell talking about, whether it's Gaza, whether it's Iran, it's Libya, it's Iraq, it's Syria, it's Ukraine and Russia, the manifold conflicts, all of which are connected and structural, but all of which affect a hell of a lot more other countries in the world than they do the United States, sandwiched in between remarkably unstable Canada and Mexico. And right. So I think that's really the issue here.
Art, some people are saying, and we've heard this from a lot of Wall Street market strategists, is that U.S. investors can withstand any of this turbulence because our economy is so strong. We're in much better shape. Do you agree with that, or is there a point where that argument doesn't hold its water?
Well, Susie, that's a great question, and Ian brings up a very good point. You really look at this geopolitical situation and then try to ascertain what that means to you. It's not as though we are isolated from the global economy, and we certainly aren't, but what effect do any one of the geopolitical concerns that Ian just brought up and listed very eloquently are going to directly affect the P/E ratio of the S&P 500 or the U.S. economy and its GDP growth rate for the balance of this year? So as we look at that, there are certainly reactions that could happen. And the biggest biggest concern I would have right now is, as a result of sanctions that have been put on Russia, you're seeing the European economy slow down. It was structurally slowing down before this happened and is getting worse because of sanctions. What has to happen there is aggressive monetary policy. We saw that announced today. The knock-on effect of that will be something like a stronger dollar, a weaker euro, and that can have an effect on your investments if you're overly invested in things that are commodity-based and things of that nature. So you might need to make sector rotation decisions and things that are going to be affected by the reactions to some of these. But, you know, in terms of being isolated from some of this, to a certain extent, there is some isolation. Global geopolitical conflicts, you know, affect locally.
Let me ask Susie's question to you, Ian. What would it take for American investors to react to what's going on overseas? What kind of event would take us from our sort of, hey, it doesn't affect us very much, to, hey, this really does affect us?
So 4 quick things I'd point on. One is if we actually do get a severe recession in Europe as a consequence of the worst case Ukraine scenarios, that clearly is going to knock on all of the trade of the United States with Europe. You can only take so much despite what Draghi's doing. Secondly, likelihood of an Iran comprehensive nuclear deal getting done has actually gone down somewhat because of the distraction of the U.S. away from Iran, so the Iranians don't believe we can get it done, and the willingness of countries like Russia to try to interfere in that. That means oil price is probably going to swing a little bit higher as a consequence. That certainly affects us. Third, God forbid, ISIS attacks on American shores. Can't really do much to hedge about that in advance, but afterwards clearly would have a very significant impact on the U.S. economy. But the most significant impact on the U.S. economy is the one that no one's talking about right now, and that is the fact that China is actually engaged in historic economic transformation, which means, and it may or may not work, and if it doesn't, the potential not only for slowdown, but more importantly for the ability of American corporations to do well and make money in China, that is a real risk for us.
That is a very fascinating point. This whole conversation is very interesting. We're going to have to leave it there. Gentlemen, thank you so much. Ian Bremmer of the Eurasia Group and Art Hogan with Wunderlich Securities.